Hello everyone. Today I am here to present on the topic Precaution for Year-End Book Closing. As we know, we have completed the financial year 24-25. We are in the process of finalizing the books of account. Each year, finance professionals bury their head in the books to prepare their accounts, statements and financial reporting. One of the easiest way to reduce stress and improve your productivity during this period is to prepare and follow a set of workflow. To give you a head start, I have laid out few of the essential steps for a successful year-end book closing. Now let's jump right into the presentation. What is year-end book closing? It is a critical process where a company finalizes its financial reporting for the year-end. It involves reviewing, reconciling and verifying all the financial transactions and aspects for the company from the last fiscal year add up or not, and closing out the books of account for the current fiscal year. It also involves in calculating the business incomes, expenses, revenues, equity, investment and more. Importance of year-end closing. It ensures accurate financial reporting, it prepares for audit, it helps in making financial informed decisions. Now let's talk about the challenges which we face during the year-end closing. First one is data accuracy and completeness. Ensuring that all the financial transactions are recorded accurately and that no transaction has been omitted can be stressful and can be challenging, especially for the businesses with a high volume of transaction. Second one is time constraint. Managing all the tasks and events within the due dates and deadlines can be stressful, especially if there are delays in receiving important documents and information regarding their accounts. Third one is compliance with accounting standards. Staying updated with constantly evolving accounting standards and tax law can be stressful, especially for the businesses operating in different and multiple jurisdictions. Fourth one is complex financial transactions. Handling complex financial transactions such as foreign currency transactions, long-term contract or unusual financial events can be stressful and can complicate the closing process. Auditing requirement. Preparing for external audit can add up a layer of complexity which requires thorough documentation and which requires the expertise. Reconciliation and adjusting account. Reconciliation all accounts and making necessary adjustments such as writing of bad debts, prepaid expenses can be stressful and can be challenging. Reliance on technology. Dependency on accounting software and IT system means that technical issue can significantly disrupt the closing process. Ensuring that the IT systems are reliable and up to date can be critical. Managing stakeholder expectation. Balancing the expectations of various stakeholders such as investors, creditors and regulatory bodies can be stressful, and maintaining the transparency and accuracy in the financial recording can be challenging. Now let's talk about the key precautions for year-end book closing. First one is regular reconciliation. Don't wait until the end of the year to reconcile the bank statement, account payable and account receivable. Perform reconciliation throughout the year to catch errors early. Second one is gather all documentation. Gather all supporting documentation such as invoices, receipts and contract for accurate record. Third one is team communication and coordination. Ensuring that there is a clear communication and coordination between the team and all the team members are on the same page regarding the closing process. Fourth one is review asset account. Check your asset list for accuracy. Internal control. Maintain a strong internal control to prevent from frauds and errors. Review adjustment. Review all the adjustments such as accrual, prepaid expenses and any other adjustment in the accounts. Ensure financial accuracy. Review all the financial transactions, verify all the journal entries and check for unposted transactions. Ensure compliance and reporting. Ensure compliance with accounting standards and tax law. Verify inventory, revenue and expenses. Confirm that all the revenue and expenses are recorded properly or not and verify all the inventory. Backup data. Regularly back up your accounting data to prevent of loss of information in case of system failure. Now let's talk about the key benefits of proper year-end book closing. First one is accurate financial reporting. Second one is it reduces the risk of penalties, legal issues and fines. Third one is it reduces the risk of fraud or errors and it improves the financial integrity. Fourth one is it's avoid financial restatement and the last one is smooth transition to the new fiscal year. Cases WorldCom 2002 accounting fraud and overstated earning. What happened? What happened was the company improperly capitalized its operating expenses as capital expenditure, allowing it to inflate the profit. The fraud led to a significant restatement of financial statements. Second one is KPMG and the Silent Bank of New York 2005 internal control failure. Due to the lack of strong internal control failure, KPMG was responsible for auditing the financial of a bank but could not document the year-end book closing properly. Conclusion, final thoughts. The year-end closing is the foundation for a smooth audit and prepares the company for a fresh financial year. Taking precaution during this process is a key to close the books efficiently and with fewer errors. That ensuring that your financial reports are trustworthy and compliant. Thank you.